is CNBC's Closing Bell with Maria Bartiromo.
With all its economic issues, the one city in the United States that should be seeing a slowdown in the real estate market is New York City, right? But senior economics reporter Steve Leisman has a look at what's happening in that market and what is keeping the market awake in a city that never sleeps.
With worries on Wall Street, the tragedy of 9/11, and New York City's unemployment rate at its highest level since 1998, logic would say Manhattan must be the city not benefiting from the real estate boom. Think again.
Both the attraction of a place to live and the resale value, and the likelihood that we won't have sharp drops, and that they know who's running the store because they're the ones running the store, are all positive influences on housing demand.
Take 50 Central Park South, with one of the most expensive views in the world. These penthouses above the Ritz-Carlton start at $17 million and go all the way up to $65 million. One top real estate executive says people, particularly rich people, are moving their money out of the stock market and into the real estate market.
I think Wall Street has become New York City real estate's best friend. I think a lot of people are moving their assets out of the market and into real estate, something that's tangible, that's not volatile, that's solid, that you can touch, you can use if you want, or you can sell if you want.
For a bird's eye view into the real estate craze, consider this brand new 11-room apartment overlooking Central Park. 5 years ago, this modest high-rise would go for $5 to $6 million. Today, it's on the market for almost $19 million. That's about $2 million more than the owner bought it for just 3 months ago.
Manhattan is an island of very, very wealthy people, although probably quiet wealth versus other cities in the world with very wealthy people. And there are seemingly endless groups of people with seemingly endless amounts of money.
Dolly Lenz, one of the top residential brokers in the city, with sales last year of nearly $500,000, says half of her clients are flipping their purchases. Most of the newly constructed homes start around the $5 million mark and quickly escalate in price. One big group of investors, foreigners, looking to diversify their portfolios.
They want real estate because they can touch it and feel it and again have control over a long term.
But not everyone in the red-hot New York real estate market is looking for a quick buck. Lots of New Yorkers are just saying, give me shelter.
Moon. That's a moon?
Rob Russell and his family just paid $318,000 for a two-bedroom in a formerly subsidized complex. Russell sold his last home in Manhattan for 76% more than he bought it for, and put the profits into remodeling this fixer-upper. It's estimated he could resell it for almost $100,000 profit. But Russell is not in the flipping business.
It's an investment because we're a family and we're living here. It's an investment because it's going to increase in value. It's an investment because I've got a lot invested in it. But it's not an investment in the sense that it was in any way ever a speculative gesture.
With the number of apartment sales in Manhattan up almost 30%, the speculators could have something to worry about. Carliner says a bubble bust may be more likely in Manhattan than anywhere, with strong demand often followed by a strong decline, as New Yorkers saw in the late 1980s when the real estate market crashed. So what you learn from the richest Manhattan palaces to the refurbished apartments is there's a bit of speculation behind the boom and a bit of real demand. And that despite tough times, thousands are still willing to spend top dollar to take their bite into the Big Apple.
The membership price is very expensive to live in Manhattan, but once you're here, this is the best club in the world.
Steve Leisman, CNBC Business News.
Interesting stuff, Steve. Thanks. Coming up next, a bullish note from Goldman Sachs on the chip equipment stocks. We'll ask analyst Jim Covella why he's now positive on that industry.